The Bank of Canada made its scheduled rate announcement today and decided to keep the rate unchanged. This is in line with some of the more recent expectations. But as recently as a few weeks ago, there was actually quite the expectation that the interest rate would probably increase. Yes, I am going to talk today about the Bank of Canada and its interest rate announcement, but also in today's video, I am going to be discussing both the Calgary and the Edmonton real estate markets and what's been happening in each of those. The economic data is finally starting to show what we all kind of intuitively knew it would show eventually. And wow, the last 2 years have really been a story of battling inflation. But while that is still a concern, the other economic indicators are suggesting that things are not all that rosy right now. GDP, or gross domestic product, is one measure of economic output. While it is far from perfect or far from a perfect measurement, it is the best tool that we have, so we, of course, continue to use it. Over the last 20 years, the GDP growth rate in Canada has been between 0 and 5.2%, except for 2 years where it dropped below zero. Most recently in 2020 due to COVID-19 and the shutdowns in Canada and around the world. And before that in 2009 after the global financial crisis that was caused by irresponsible US subprime mortgage lending. GDP growth in Canada right now is at about 1% for the year 2023, and it's not expected to recover from that level until about 2025. CPI inflation, that's the one where we keep talking about that 2% target. High inflation since mid 2021 is the only reason that the Bank of Canada has been increasing its interest rate. In June, inflation dropped to 2.8%, which is within the tolerance that the bank allows, but it jumped back up to 4% by August before dropping slightly to 3.8% in September. So there is still work to do there. The bank did expect these bumps, which was caused in part by higher fuel prices. The bank's now expecting inflation to hover at about 3.5% for the next year before settling where it should be at that 2% target in 2025. And this right now feeds into the higher for longer talk, where drops to interest rates are now expected to be further into the future and to be more gradual than previously estimated. In 2024, most of the major bank economists expect only 0.5% decrease through the year, with the first 0.25% drop not happening until after July. So both 0.25% drops in the back half of next year. As always, of course, the bank left the door open to future rate increases if inflation picks up or remains stubbornly high. They're here to manage our expectations, and if we think they're done, we might start spending more or borrowing more, and they do want to make sure that they're keeping some tabs on that so that inflation doesn't go right back up. Meanwhile, the rising interest rates have really softened the real estate markets in the costliest markets in our country. Toronto area, Vancouver area, but not so much here in Alberta. We continue to have the most affordable housing markets of the 6 major markets over 1 million people. In Calgary, we've continued to see a high level of sales and prices continuing to increase for all types of homes, apartments all the way to single-family homes. The average sale price for all types of homes has climbed now to $550,000. That's up from about $472,000 back in January of 2021, so 2.5 years ago. Just like everywhere in the country, prices peaked in Calgary in March of 2022 when the Bank of Canada started aggressively rising interest rates. But that downward price movement bottomed out only a few months later in August of 2022, barely dropping below the August of 2021 prices. Normally, by August each year, we start to see the number of sales each month decrease as the so-called spring market ends, and that's no different this year. However, it is interesting to note or to see that the number of sales is higher in July, August, and September than it has been in each of the previous 2 years by a pretty big margin, with about a 25% increase over those same months in 2022. Growth in both Calgary and Edmonton real estate prices can be partially attributed to interprovincial migration, in addition to international migration, as the ability of middle class income earners to purchase a home in Ontario or British Columbia, as that's largely evaporated. Many see Alberta as the best opportunity to earn a good living and also own a home with a good work life balance. In Edmonton, home ownership is even more affordable than in Calgary. Average home prices have been pretty stable over the last couple of years, moving up and down within about a 15% variance for the last 3 years. Prices and the number of monthly sales are above pre-COVID levels, but for those working to get a down payment saved up, not ready yet. So if you're working on that before purchasing a home for the first time, the urgency to get a home right away before prices increase even more, it's not as high as we see in the Calgary market. In Edmonton, we're also seeing a higher number of sales in Edmonton from July to September of this year than either of the previous 2 years as well. So there's definitely some recovery from the slowdown of 2022. It's up about the same 25% as we're seeing in Calgary. So it will be rather interesting to see how sales activity moderates over the rest of the year and how early in 2024 we see things pick up again. So as always, this is really just a peek at the information that's out there. But if you have a specific question, or if you want to see if now is the time to purchase, or if you need to look at options for your existing home or mortgage, please reach out. My team and I are here, we're ready, and we're eager to help you out. Thank you.